All right, good morning, everyone. Should be live here by now. Looks like we're good to go. And we've got NASDAQ futures slightly lower today. What up, Paul? What up, Nighthawk? Want to buy some Tether. So I'm here to do my real stock stream, but I noticed the insane movement in cryptocurrency. Um, is that something to do with Tether, Paul, or you're just noticing it failing from a break up to 6,800, which which is insane. Um, yeah, then instantly right back down. That is definitely not bullish action. Yeah, I mean I don't even know what to say about that. That scares the crap. I mean, pretty much out of everyone, this whole thing got bartered around in every direction. Um, yeah, I don't know. That sucks. That's gonna be really weird. Wow, look at these two exchanges between Bitfinex and Coinbase. You got Tether dipped to 80 cents last night. Wow. Oh, I'm so sore from camping. You're gonna hear a lot of weird noises out of me. Really? That's crazy. I don't know if I've got it up here or not. Yeah, I think that just goes to show you. Yeah, it's at 96 cents. I've only got it down to like 96 cents. Even that's a pretty big move for Tether. If you remember last week, I forget who it was talking about it, and I said, here you go. Remember, it was slowly rolling over. I'm like, yeah, it is kind of rolling. See what happens. If it gets to 99 cents, maybe something could happen. But bam, yeah, look at that, down to 96 cents. That could get really weird real fast. So that's someone selling a bunch of Tether to buy Bitcoin. That would be my assumption there. I mean, that would kind of be the assumption here. You sell Bitcoin, you sell Bitcoin to buy something else, Bitcoin dips. You sell Tether to buy something else, Tether dips. Enough to FUD the market. Hmm. So weird. See, I don't even. If it was gonna run like that, man. If it's gonna go up that high, like this is a pretty big move. We haven't seen a move like this in Bitcoin in a long time. It's like 10% BART. I mean, this one was a pretty big down move, 7%, but this one's 10%, and then a full. No, it's retracing like 60% of that bar. I mean, that's definitely a sell signal. It's definitely a sell signal. So yeah, I don't know if I want to buy Tether, but it may be getting close time to short Bitcoin. Anyway, let's get back to stocks. Looks like that's going to be around there for a while. All right, so we got NASDAQ here down about 4%. As my chart gets weird on me. There we go. So look at some IBD stuff. Let's go check that out. Look at some other pre-market movers. NASDAQ lead stock futures lower. Market in correction. Yes, it is. Absolutely. Now we left off on Friday or Thursday. It was. Oh, do they print the distribution days? They printed the distribution days, guys. That's awesome. They don't do that anymore. So we mentioned on Thursday about a follow-through day. So a follow-through day is a different, like what we talked about, what we looked at on Thursday was a high volume down day. and we actually had another high volume down day just after, on was it Thursday? And Thursday ended up being a higher volume day than this day, which is interesting. So here's the thing: there's no real way to tell exactly what a high volume day, exactly how much volume is enough volume. There's no real formula for that. I think one could probably be made up, but it would be a lot of guesses. Hold on, I'll get back to that later. Now, one more surefire way to make sure you're investing back at a proper time. So what we talked about on Thursday, blesses, is it accumulation? You referring? Can you elaborate on that question, Blair? I think I saw that late. So we talked about the high volume down day. We mentioned this as a high volume down day, and then we had Friday. Oh no, the rest of the day, Thursday. Excuse me, I was not here Friday. This is Friday. So Thursday came in and had a more high volume down, had more volume, 1.14 million shares traded, which is big. Let's blow this chart up. Now, when the market goes into a correction, and I'm a big follower of IBD. Look at that volume, guys. That's huge. I'm a big follower of IBD. And let's go to the weekly since this is Monday. So the weekly will give us nice full bars. And we can see, okay. So here's a high volume week, very similar to last week right here. So even though it is much higher volume, we are in good company in terms of this being a bottom. Now, this doesn't have to be the bottom. We talked about this is the 12% correction that we had here and here. This line is a 15% correction. This line is a bear market or 20% correction. This would line up nicely with this trend line put in with these two lows going back from 2016. And because you don't know when a bottom is, like I said last Thursday, we talked about buying a bottom area and then trying to try and time the market by buying a huge volume candle and then just kind of letting it go, even if it FUDs us out for a week or a month or something. Usually when you find the high volume bottom in the stock market, it's usually the bottom, okay? Now, another way to do that, and this is IBD's way, and a very good way, this is probably better than the other way. You usually won't get as low of a print, but your money is usually in better company at that particular point in time. And the market will I would say usually, because nothing's 100% in the stock market, usually rebound into profitability much faster, and that's a follow-through day. Now, a follow-through day is once we're in a bear market, you start a count of 4. If you guys can count to 4, you can learn to spot a follow-through day. Man, I'm really sound like I'm sick. Just campfire smoke. Okay, so our market went into correction. I think it was this day, wasn't it? On the big day is when we went into correction. So once you're into correction, you're looking for, after you find a bottom. So this was the correction day, but this is actually the lowest print. Let me go ahead and get rid of this circle. Now, I do want to point something else out to you, ladies and gentlemen, is that I'm looking at the NQ, and I have noticed a big difference between the NQ and the QQQ. A big difference here, which is new to me, and I really haven't had enough time to figure out why this may actually be. What's up, Eli? So I've been looking at the NQ. Look at the QQQs, the triple Qs. The NASDAQ futures is predominantly traded by professionals, and I'm thinking that may be the difference, is that the Qs, I think the Qs are more traded by retail investors, and the futures are more traded by institutional investors. I'm thinking that's the difference. I haven't done any research to really hash out either way, but look at this big difference. Now, these are supposed to be pretty close to the same damn thing on this day right here. Look at this day, look at this day. This day closed lower, this day closed higher, and the bars were fairly significantly different. So there's going to be a difference between the Qs and the NQ. I just want you to keep that in mind. But I've been looking at the NQ, so I'm going to keep looking at the NQ. So the NQ here, we have a bottom day right here. It's the same on the Qs. The Qs, this is still the bottom day. Now you start a count of 4. 1, 2, 3, 4. And you're looking for what's called a follow-through day. After the market is bottomed, you want a sign that tells you the market's good to go. Okay? And a follow-through day is after the 4th day from the bottom. So 1, 2, 3, 4. So you can't have a follow-through day today. Now, there was a 3-day follow-through in like 2015 or 14 or something like that recently. And that's a William O'Neill decision. That's a long topic of conversation. I think that was the day after Christmas. It was like a half day in the market, and he said, screw everything. This is a follow-through day. Like, William O'Neill's the man. And when the man tells you this is a follow-through day, you just listen. You don't argue. So he called I think it was Christmas Eve or the day after Thanksgiving, or it was a holiday. He said it was a follow-through day. But that was a rare third-day follow-through day. Could we get one today? I guess we could. But typically 4th or onward, and follow-through days have come up to 23 days after the bottom. So you can wait a while for a follow-through day. Now, this market situation has been weird, especially with this bull market run that we've had in the past several years. These corrections have been short and very swift and very quick to come back. So we could be looking at a follow-through day very shortly here. As we talked about our other situation, your bottom buy, if you're looking for high volume, is already, pretty much upon us, probably even after Thursday. But a follow-through day is a day up about 1% in volume that is higher than the previous days. Okay, so it doesn't matter if the previous day was a green day or a red day, the volume has to be higher. So, none of this so far would qualify as a follow-through day. Look at over here. I believe they did call market in correction. I did not go back through IBD history to say exactly which day it went into a correction. But if you look at it from a follow-through day perspective, and we talked a little bit about this, I think Wednesday or Tuesday. So here's the bottom. There's the low print. Now, one rule to looking for follow-through days, if there's a new low, you start the count over. So here's a low. But by this day, you're starting the count over. By this day, you're starting the count over. So we've got 1, 2, 3, 4. So could this be a follow-through day right here? This could be a follow-through day, higher volume, higher percentage, but it was undercut here. So you start a new follow-through day count. So you got 1, 2, 3, 4, not an up day. 5, an up day but lower volume. 6, 7, an up day with higher volume, but is it enough percentage? Well, it better be, because your next follow-through day have to be like this one or something like that. So, is that enough? Is 0.62% enough up day for a follow-through day? I'd have to go back through IBD history to see if they called that a follow-through day. But anyway, you can kind of see the general gist of it. I think they want about 1%. That may be a little low for them. That may be a little low for them, but they still may have called it. And this was never undercut, so even if that was questionable in hindsight, it would be a follow-through day. So right there, and I believe this day is where I got back in stocks when we crossed over the 50-day. So you can see by following that. So there's two strategies at play right here. One is that high volume down day we talked about, which was here, and that would have put us in the buy area here. Another would be a follow-through day, which is here, which could have put us in a buy area up here. Both very valid. Both would have worked, and we'll have to see what happens here. If we go lower, if we get a follow-through day, and all that jazz. So anyone have any questions about a follow-through day? I know that's just a brief introduction. Eli asked the difference between a Roth and traditional IRA. What's up, Eli? Yeah, so a Roth IRA, it basically has to do with taxation. And, hold on a second. All right, so it has to do with taxation on the input side, well, and the output side. A Roth IRA, you deposit with after-tax money. A traditional IRA, you deposit with pre-tax money. So in your work, if you participate in a retirement fund, it's going to be like a 401k, which is more like a traditional IRA. It's just a work-sponsored IRA. And that money gets deducted for your wages. Okay? That gets deducted for your wages. And with a Roth IRA, that money does not get deducted from your wages. Now, they have Roth 401ks, which I think, Eli, you found out about. And that's probably why I didn't think about because I'm not really familiar with Roth 401ks. Not too many people, not too many employers, should I say, actually sponsor those. But within a Roth, you pay the taxes. It's after tax money you pay with. So think of your paycheck, right? With the 401k example, say you make $2,000 a paycheck, and you invest $300. Your taxable pay with a traditional IRA or a 401k would be $1,700. With a Roth IRA, it would be $2,000. You pay with money that's already been taxed. Then when you withdraw at retirement, the Roth IRA, you pay no taxes on the withdrawal of all of those funds, where with the traditional IRA, you pay taxes on all of those withdrawals. So it's a tax savings, it's a tax vehicle, and market just opened right there, crawling up 6%. Look at that. What's down today? Eris, C-Trip. Cron and Tilroy, man, weed stocks. We were talking about that last week, Eli. The weed stocks are back. Now, there should be no difference in terms of what you can invest. They're both retirement accounts. They're both subject to the same limitations. In terms of what you can and cannot invest in, you shouldn't be able to invest in margin with either of those. What's up, Ian? Did you look into that, Eli? Because like I said, that's into some territory that I haven't. Oh, I thought you had a Roth 401k. You can't transfer anything on that account. Damn it. And IB didn't give you anything when you sign up your account under the KYC. They just let you open up a Roth. They just let you open up a Roth. That's beautiful. I'm sorry, man. Okay, yeah, Roth 401k not under. Okay, that makes sense. That's probably why they do it at your work. You probably have a lot of people that are over that salary limit. So yeah, Roth already does come with a salary limit. I don't know what it is. It's like 150 or 175,000 a year or something like that. I forget exactly what it is. Daniel says if we don't close above the 200-day moving average, if we don't close above, would you say there's more chance of a sell-off ahead? I'm talking about the SPY. Let's take a look at the SPY. Well, we're pretty much at that point on the 200-day. We had one pretty scary close here earlier. Actually, it looks like this one closed underneath. And look at this day. This day would have scared the crap out of you. Yeah, you should, Eli. You should. Yeah, so there is a limit on the Roth. So if you like, just go to Fidelity or TD Ameritrade. Roth IRA limitations. So it looks like if you're single filers, about 118,000, I think, is the income limit. So if you make over 118,000, you're unable to contribute to a Roth IRA, I believe is what it is. Maybe it's 120,000. This is a strange table. But anyway, yeah, so if you make under 120,000 a year, I would call your broker before you open up a Roth IRA, because yeah, Eli just got caught up in a situation where he makes too much money to invest in an IRA. Now, one way to get around that is a backdoor IRA, and I don't know too many specifics about that. So, but I would talk with a tax professional regarding a backdoor IRA and how to do that. Oh, it's Roth IRA contributions 2018. Oh yeah, so under 120,000. That's a weird table. All right, but in terms of right here, the SPY closing under the 200. So, well, it's already closed under here twice. There's going to be a bar that's like, the death bar in the markets if we're going to head a lot lower, and maybe it could be today, maybe it could be tomorrow if it's going to happen. Let me go. Hold on, guys. Give me a minute. I'll be right back. Okay. So yeah, the SPY is already closed 2 days under this 200-day moving average, and a third day isn't really going to change a whole heck of a lot. The biggest factor is going to be is if we undercut the prior low. That goes the same for the NASDAQ. All right, if we undercut that prior low, then we may be on our way to lower lows. Now, right now, we're very early in this drop. So we had a drop here, a little consolidation of a few days, and then the two larger drops last week. If we continue the slide like we did with the NASDAQ, there's a possibility. Let's draw those lines here on the SPY. You got what could be a 15% correction. Right there. Takes us down to about 250. If we go into a bear market, that's going to take us down much further. That's about 20% to approximately 235. Okay. So what we just looked at the NASDAQ earlier today, the question was, what's a high volume day? Because when we were talking about high volume days on Thursday, Thursday was a higher volume day than Wednesday was. And looking at the SPY looks like we can see high volume prints up in this level in the 355,000 range. So maybe we haven't seen our high volume high volume day yet. That sure is a possibility. So yeah, living under the 50 days is a bad thing. Living under the 200 days, a very bad thing. It got down here very quickly on the SPY. Now we've been looking at the NASDAQ, not the SPY. But so far, we're failing to see a lot of new highs. It looks like we're still kind of looks worse on the SPY than it does the NASDAQ, or at least the SNQ. See, the NQ looks different than the QQQ, and there's a big difference there. So the QQ would be akin to the SPY, and that's the triple Qs right there. We did have that was Friday. Friday was a big up day, and sometimes what they'll do on Fridays is they'll print it up on Fridays just to get people not scared. So we have to see if that's how that's going to play out the first couple of days of this week. But right now we have our low day on the NASDAQ at 168. But I don't think necessarily it closed under the 200-day. is like the death march. It's something to note, but these are secondary moving averages, and the price action is really what counts. When you get lower here like this, if you remember when we were up here, I was talking about a test of the 50-day. We never got a test of the 50-day. Okay, it pretty much immediately dropped. We never did get that test. Now in the future we may get that test. We may be in a situation where we've had enough volume. We may go sideways here for a little bit. Maybe the 50-day comes down. Then we test that 50-day. You'll more often see a test of the 50-day than an immediate break of the 50 and 200-day. So you can see here it was supported by the 200-day on the Qs. And I can't go back further than that right now. This isn't like TradingView. This only loads as much chart, probably for performance reasons. Oh, there you go. It tells me my style. So this is a little more bearish than this because it has crossed through the 200-day. So, and maybe this is not enough volume. Maybe we're going to see more high volume prints going down. But we'll have to wait and see. But wheat stocks are holding up pretty good here. Let's look at some individual names and see what they're doing, how they're holding up. So we got this is MJ. This is kind of this is the wheat ETF. I kind of like this setup generally right now. If the market were showing more strength, I'd be really interested in that setup. OGRMF breaking up from that trend line we drawn there last week. Pretty good little gap right there. Let's see if that maintains. Tilroy, a lot of strength overall in TLRY here. Look at that after the major run up to 300 from $20 from the IPO. You have a pullback here to 150. That is strength, guys. That's all I got to say about that. All right, Torch, not a leading stock. Cron, another wheat stock. Car. Save is Spirit Airlines. They had an interesting V bottom right there. V bottoms don't really work out, but that's quite a bit of volume. That could be considered something called straight up off the bottom. Straight off the bottom, straight up off the bottom. That could be straight up off the bottom, but failure to go into new highs here. Your buy point here, actually, and this usually happens in a double bottom pattern. This is your buy point at 48.3 if you're interested in save. But that's some pretty good volume right there. There's the MJ up 1%, another marijuana. Signature Bank of New York. ENDP, we know how strong they were last week. They're not really selling off much at all. So if you're into buying stocks, this is actually within a buy range, very similar to how WHD was acting. It was barely edging out. NASDAQ now down about 0.84%. Looks like it's sliding a little bit here. We'll keep that in mind over there. NIO, Eli, let's take a look. So NIO has its your buy point on this is up here at 13.8. It looks like. So that's your buy point. This prior high. This is what's called an IPO base, and like any base, you can do whatever you want, but a traditional buy would be a break over this level here at 13.8. Now, if you wanted to try to trade aggressively, you could try to buy here over 9.5. I would probably try to wait until it gets over this level if you even wanted to be aggressive. But good little setup. I'm not going to alter to see volume, but not too bad. You got kind of a weird little bull flag right there off of that low, very tight action right there. But yeah, I would probably wait until this is broken up here at 9.4, 9.5. What do they do? All right, so what else do we have? We got ADXS, EQM. They do cars. Oh, that's great. Scala right there. Future Fuel. Just going through seeing what some of the these are some of the good chart patterns of leading stocks I've seen throughout the past several years. Aggregate it into one big ass list. So if something moves, I usually see it. Usually. I don't have every stock in here, but All right, Foot Locker looking like a little bit of a basing pattern, a little bit of a rounding bottom occurring right there. BA looks like block selling to Eli. Let's take a look at Boeing. So, yeah, I don't know about insiders. They really, in theory, shouldn't be able to do that, obviously, due to insider information, insider trading laws. But yeah, there definitely is some selling down here. We broke out here fairly nicely. Volume was good. And then we ended up rolling back over in higher volume. So I got out of Boeing, and I'm staying out of Boeing for right now. Earnings is so close. I'm just not even playing it. I don't think that, yeah, I don't know if the insiders would. I mean, obviously there's insider trading happening. This could be a sell-off before earnings, but I'm not sure. So here's the thing, Eli. Insider trading usually happens. I mean, it happens every day, but the CEOs usually aren't the ones that do it. They usually give tips to other people. Now, how the money's transferred after that, I don't know. But could there be a bad earnings announcement that was leaked? Sure, but I wouldn't try to guess in front of earnings. I would just play this as regular rules. And the regular rules would say pulling into a base is usually not good technical action. Foot Locker having that little curving right there, which could be fairly healthy. So if we see here, we had the big gap up. It went a little bit higher and started rolling over. Volume wasn't very heavy. Filled the gap there, which most stocks typically do. And so we could be getting ready to go back towards highs. Or maybe curl back up. I don't know exactly what it's going to do. If it's going to curl up and go like this. If it's going to round over and go lower. I mean, no one knows. But if the market is fairly steady here, if we have seen, because, as we talked about those high volume low days, if we've seen the high volume print, which would have been last Thursday. Now, one thing to note on Thursday, and we haven't talked about this yet, is that Thursday was a major volume day, but notice the price did not drop that much at all. Price was actually maintained at a very good level relative to the previous closes, down about 1.5%. But the volume was, up by like 25 to 30% the previous day. So in theory, you would think that if you think of this as a big sell bar, wouldn't you think that we would have a day that was 25 to 30% of this? So shouldn't we have been right down there on Thursday? Instead, we closed well up here. So there was quite a bit of buying and accumulation on this day right there. Absolutely, there was some selling, no doubt about that. But there's some accumulation there as well. And that's why on Thursday we were talking about those high volume sell bars, because those large institutions are what create those large volumes. And we touched on that. I didn't harp on it, but we touched on it. So I think, and that's kind of the whole theory also behind a follow-through days. You're looking for institutional support. And that's why you're waiting for after a bottom's been printed for that fourth day. You're looking for that support from institutions. And what we're looking for with these stocks right here is some early accumulation, some possible early movement in some good names. Foot Locker looking pretty good. Notice it really didn't sell off with the rest of the market. You see that relative strength right there? No major volume to speak of, but it still hasn't sold off, so it is relatively strong compared to the rest of the market. So if it does get moving, Foot Locker does have some supportive institutions. They've sold their lot up here. They really weren't interested, and they've been accumulating, looks like, a little bit via the price action there. All right, let's keep going, looking for some leading stocks. Ulta looking really healthy right here. Let's peek in, see if it's actually healthy or just looks like it. Trying to break a little level of resistance, which is this prior high. So that's a little bit of a healthier volume candle. Hold on a second. And we'll look at Boot in a second. So there's a bit of resistance. Both of these are selling bars right there, and there's a elevated volume on this, and so there was a little bit of selling right there. That's probably where that extra volume kicked in. And maybe Ulta could get going if the tape turns around. You guys know what I mean when I say tape? If you don't, leave a comment. I'll explain it. Let's take a look at Boot. What's Boot doing? All right, so Boot came down, tried to fill that gap. right there. You know, I basically call that a gap fill. It's minute, but I mean, you get what you get, and you don't throw a fit. Trend line right there on boot does look okay. Earnings coming up here shortly. Looks like a few weeks, 11-1. There's your highest volume right there. It's looking pretty good. Not great, but pretty good. I wish the volume was a little bit weaker on the sell side. Wow, URI. Not interested in life down here. Look at that, guys. Oh, this could be a channel play if you like to trade those bounces. Again, everyone trades a little differently. So if I see opportunities in different styles, there's a bounce play right there, potentially up here to 161 on URI. That could be interesting, taking you out to some December. CGC, let's look at CGC. It was looking really good. Oh, there we go, trying to break out here. Coming up to a point where we should have resistance, so we'll have to go ahead and see how that reacts at that resistance. NASDAQ about 0.78%. That's the QQ. Let's look at the NQ, down about the same. Now looking at the looking at that volume here, Brandon's reminding you guys to smash the like button. Yep, please go ahead and do that. Share the video too if you don't mind, if you got a Twitter feed or something. We'll be on here for another 15 minutes or so. I'm going to have to give my kids some extra motivation to get to school on a Monday morning after camping. So volume here, a little elevated in terms of Friday's level, I think, here. So we'll probably see another high volume day here. So maybe we talked earlier about them printing it up on Friday to sell it on Monday and Tuesday. We'll see if that's the case here today. We failed to go higher so far, but we can. There's plenty of range for us to flounder about right here. Like, what's the percentage range here? That's about a 4% range between these two bars. We could hang out in this range for all week and really not break any rules in either direction. No, not ass whooping. Now, my kid was already apprehensive about going to school this week, so. Oh, but CGC looking good right there. I don't have CGC on this list. I should add it. That would be leading the list, and that's good to note. Yeah, it looks like it's going for that level, Eli. Good volume here so far. Actually, I do like CGC here. Do you have something in the watch list, buddy? For CGC, I see an old one. I don't know if that's current or not. But CGC trying to break that trend line right there. We had another one with a similar trend line. Now, again, guys, keep in mind, technically the market is still in a correction. So if you do want to play, make sure you're very comfortable with your risk situation. I would say make sure that you're very comfortable with the industry that you're investing in. And marijuana is a great interesting these days. Watching while crying inside. Okay, so a normal day. That sounds about right. And there we go, selling off from that line. What's our target in CGC? Looks like we already have this drawn out. About 80%, is that right? 80 bucks. Come on, you piece of garbage. There we go. No, I gave that to 40% because it's such a volatile name. Let's call it 68. And then CGC. That'd be your 20% target. That's a very normalized target. Yeah, options aren't looking that great right now for that one. Now, URI could be one of those interesting range-bound bounce plays. Look at that, come down quite a bit. And boom, let's check out that one. If you guys want to look at some individual names, this is a question and answer. You don't have to sit here listen to me yabber on about about nothing. You guys have anything you do want to look at, please do. I really like looking at your guys' stuff. Otherwise, I got to make up stuff on the fly. It's called The Lazy Presenter. All right, so let's see what's down today. Gold. Talk about gold. Yeah, no thanks. It's every time I talk about the stock market, it's so funny. People mention gold like gold is a stock. I think that's pretty funny. All right, so what's down? C-Trip is down. It's a China stock. Why is it China stock? Living in a little bear flag right here. That looks like you want to short that. GDS, I'm not sure what GDS is. Triple Q outlook. Well, I go by that off of the the Nasdaq. Blah. Did you really want to look at gold, Eli? We can do that. So I trade the TQQQ on the heels of the parent exchange, which would be the Qs or other stuff, or the futures or whatnot. All right. All right, so here on the triple Qs, down about almost 3%. If you go back to the NQ, we're down about 0.86%. QQQ down about 0.89%, 0.91%. So we're starting a little sell-off here this morning. So the volume on the Qs here, about a half an hour into the trading day. Let's go down to that lower term. The volume this morning isn't as elevated as we've seen in previous days. You can look at the open volume only hitting 2 million shares. We've seen up here it hit 4 million shares and above on different days. So if selling gets elevated here and that volume starts to elevate, that could get really nasty. But so far what the volume shows here is really lack of I won't say lack of, but it shows less selling, less volume pressure. Doesn't mean we can't move lower, but it's less likely. Thoughts on SQQQ? Yeah, so we're talking about two sides of the same coin here. So if you think we're moving lower, if you don't believe in the high volume print, then I would think SQQQ could be a good move from these levels. So we have been forming this little consolidation in the markets the past several days. So let's blow this up. And if you believe we break down from this, then yes, this I think will be a good area to sell. And this is a natural stop point on Friday at about, give or take 1.25%. That would be a natural stopping point if you're going to go short. And the SQQQ is the opposite of the TQQQ. It would give you three times returns on shorting this index. So again, if you think that this is just a dead cat bounce and we're going to roll over from here, SQQQ could be a good position. If you think that we've seen a high volume print and we've bottomed, that probably wouldn't be the best thing to do at these levels. Then you're shorting in a bottoming range at that particular point. That all comes down to your strategy and how you want to play it. I'm not mad. Excuse me. Not going to be mad at you if you try to short the market up here. And there's some decent profit to be had. Even like say we come down and kind of retest down here. That's 1.75%. So that's like what? 3, 4, 5, 6, 7%, whatever it is. Not quite 8%. That'd be about a 7% move. Even if we roll over down here a little bit and don't undercut this low print on this very high volume day right there, we can still oscillate. You can still take some profit in that SQQQ. All right, let's check it out. Another weed name. MMNFF. Oh, look at that. There you go. Not sure if that's in the ETF or not. It is over the counter, so probably not. This would be more under the radar. But yeah, I'll add that one too. Why not? Add that to the list, up 14% today. Yeah, if we would have been looking on Friday, obviously I think that would have worked out pretty well. That would have been on the pre-market movers list. That would have worked out. All right, what's working here today? So we got that MMNFF. It's all weed stocks, guys. I mean, these marijuana stocks are something else. They've held up very well. You got OGRMF, which is a another over the. Both of these are over the counter, meaning they're not on the Nasdaq, they're not on the American Stock Exchange, or on other exchanges. And boom, right there, you can see OGRMF breaking out. Volume's already really good. Today's probably gonna be a pretty good day for weed. The MJ is already basically doubled from where we saw it, up at about 2%. I think MJ is really good. MJ is a marijuana ETF. It probably doesn't have these OTC names in it, but it's going to have CGC, Tilroy, things like that. 9, look at their 9. I think I mentioned them on Thursday last week. They were poking higher, so retail showing a little bit of strength here. I believe 9 is retail. I could be wrong about that, but so I'm going to post this IBD article that I saw. I really hadn't. Oh, you son of a bitch! You got in, MJ. You suck. So I posted a link there to an article that I haven't read. We're getting close to the time where I got to run, so I wanted to look at this later. I want to make sure you guys have the opportunity to as well. This is IBD going over the distribution days. Oh, there's a lot of stalling days in there too. So you can take a look at that article. Very good stuff right there. Maybe that'll negate some stuff I'm saying. I have no idea. But 9 looking really good here. Hertz looking good. So, if we're done, if this is the end of the sell-off here and we go higher, guys, marijuana is going to lead us higher. I mean, just in leaps and bounds, it's going to lead us higher. We mentioned Ulta, another retail name. We mentioned that they were looking very good. Ulta's looking good. A lot of money going into retail here. Yeah, camping was a good time, Nick. Thanks for mentioning that. Ooh, Air Lease. This is a airline lease. They lease airplanes out. Pretty bad right there. I get you, Eli. I get you. So leading sectors appear to be certain retail names, probably certain groups within retail, and MJ names obviously leading us higher. I just had Twitter on there. What's Twitter up to? You're jumping around Twitter. So I mentioned Twitter possibly curling right there a little bit, and then it broke. So that's not good anymore. Control4 retraced the entire gap. So if you're interested, maybe a gap fill, but I don't buy stocks like that. Nu Skin failing. A lot of things not looking very healthy. There's the Curling and Foot Locker, another retail name showing relative strength. So we're seeing strength in retail. Haven't seen a lot of drug names up here. We're seeing marijuana in retail, and that's pretty much all it is, guys. It's pretty much all we're noticing today is marijuana in retailers. So with that, I'm probably going to get out of here. Any last minute questions, guys, before I get out of here and try to roll my kids out of bed and do some stretching? I'm sore from camping. And the Q's down 1% right now. What are you talking about there, Eli? Twitter? Yeah, no, I'm not touching Twitter. No way. It failed that bottoming action within about 12 seconds, so not going to be participating in that. So on the Qs here, the volume isn't super elevated, and we noted that on the 5-minute chart, so I don't think today is going to be a huge day. Now, volume could pick up throughout the day. Oh, Control4, yeah, me either, Eli, on Control4, not touching that one. But some guys look for gap fills, just trying to point that out, but I won't touch that. So volume could pick up here. Going back to the 5-minute. So volume could pick up here. It did pick up 3 minutes, 2 minutes left in this bar. We could pick up. We could just flounder lower. But it's really these high volume days that typically will set the tone. Now, we have seen in the past, if you remember Thursday, cold shower. I took one of those for 3 days. Took one of those for 3 days. We have seen it in the past here where the market did go lower on low volume. We did see that on Thursday when we did our analysis of the market. So it can happen. Remember, there was this one point in the market, and we could be in that range. You know, there's a possibility that we could be in this section of the market. Where was it? Right here. I think this was the area where we had some high volume down days, and it still continued lower. And our bottom actually was not the highest volume print. Remember, like we talked about this right here, or this was that same 12%. We moved that bar way down here. So this is a situation where a high volume bottom did not work. And it did work in time. You can see here there was a V bottom right there. But this took us a while. That took us 100 days. So that's a pretty long hold. That's about a 4 or 5 month hold if you're buying in one of these days over here. But again, talking about what we discussed on Thursday, the difference between what we usually do here every day talking about individual stocks and what we talked about on Thursday is that this is an index. It will come back. I have no doubt about that. So it just depends where the low is. How low is the low? So here's a situation where the high volume down day went a lot lower. You know, another 8% or so before finally coming back. So keep that in mind. We definitely can go lower, even if we do have a high volume print. So, all right, let's see if there's any questions. Other than that, I'm gonna get out of here. We expected QQQ to follow with lower when bounce. So are you saying this is the bounce here? Definitely could be. Yep, could be the bounce with lower prices. And that's kind of what we just talked about, is a possibility we go lower. And if you did want to short, we mentioned up here, looks like that would already be a little bit profitable there. So, all right, guys, I'm gonna get out of here. No video in Tether today. I just woke up and did this stream, JJ. So we'll talk about cryptos when we talk about cryptos. I haven't had a chance to look at much of anything, but I did notice the crazy action in cryptos. We definitely will be talking about that and the carnage it probably caused a lot of people. All right, guys, I'm gonna get out of here. Have a good one. See you in a few hours.